so highly. Margins are ridiculous still, growth is steady. It's bought back about 15% of outstanding shares in the last 10 years.
Wow.
And yet you can get a stock like that for 20 times earnings when the S&P 500 average earnings multiple is about 30 times. So that's a serious discount to the market for what is, on paper, an incredibly high quality business. Emmett, how we getting on?
Hey, Mike, how you doing?
I'm good. Do you know who's better than me, though?
Who?
Elon Musk.
Tell me why. Oh, the soon-to-be trillionaire.
1 trillion.
Yeah. When you read the terms of it, I mean, it's a high bar to get over, really.
Well, do you know what's stupid about it?
What?
And because I think the $1 trillion number was probably him to make the headlines and whatever else. But what's stupid about it is he would be a trillionaire if Tesla got to that valuation anyways.
Yeah, that's right. Oh, I see. Interesting. So it would be just to have another trillion.
Yeah, if Tesla goes up to 8.5 billion, I think is the ultimate goal, which would be the completion of the pay package. But and look, there's more to it. Like, he wants more control of the business. He feels like he's losing it. He feels like if he can have 25% of Tesla, he's able to do exactly what he wants, which is Optimus and self-driving and whatever else. And fair enough. But the round number of it just feels so sensationalist and bombastic and a little silly. Like,
yeah, well, they had to find something that grabs the headlines. 850 billion just doesn't do it.
No, it's just, it is what it is. But as a Tesla shareholder, I'd say, like, is in the most important thing, I think, and the board has been saying it, Tesla shareholders have been saying, and I think everything is that you just need to keep him there and engaged and motivated. And this seems to have done that and will do that, hopefully. So, yeah.
He's a once-in-a-generation visionary. You know, he's up there with Steve Jobs and all the others. And I think that keeping him in that seat is absolutely critical. I think the business can, of course, keep going and survive and stay profitable in his absence, but it won't have that level of ambition and clarity of purpose. And funny, only last night I was chatting with my wife about the movie I, Robot, or the book by, is it Isaac Asimov? And I love that book. It's a terrific book. Do you know the laws of robotics and how
the original?
Yes, exactly. And how there are as many robots as there are humans, which basically is what Musk was alluding to in his in that very bizarre shareholders meeting, where actually, sorry, I digress. He said in the shareholders meeting, which I thought was hilarious, he goes, we all remember R2-D2 from Star Wars. Imagine me, but the problem with R2-D2 is he needed C-3PO to translate, which was so nerdy for him to actually give that little nuance. Because you see, he said R2-D2 just was all squeaks, whereas C-3PO would translate. Well, with Optimus, you don't need to translate. He just speaks English. I was like, what?
It's like, cool. That's what I was worried about.
This is our local trillionaire.
Uprising. Yeah.
Yeah. Anyway, good luck to him, as they say in Ireland. I do hope he succeeds, because one of the milestones is to multiply the market cap by sixfold multiple on today's market cap, which would really put any Tesla shareholders in a comfortable position.
Yeah, absolutely. So where are we going with today's show? We're not going to dwell on Tesla.
Well, I guess I'd like to start by asking our listeners to do something we've never asked, which is subscribe to this podcast, folks. You know, don't just listen, but open up Spotify or Apple's podcast app and click.
YouTube.
Oh yeah. Like and follow for more. I mean, click on the subscribe button. It helps us backstage in ways that, to be honest, I don't even understand. But we, Mike, you and I and the team, we all met, and it occurred to us that we've never asked people to just subscribe to the podcast, because it's very important. Please just subscribe to the podcast, folks. Needless to say, it's completely free to subscribe to. Nothing will change in your life whatsoever, for good or bad. Well, actually, for good, really. And I was reading, though, that if you do not subscribe, you'll be left with a feeling of malaise and general despair. So just subscribe today, folks, and save a baby panda. Right? That's my best effort, Mike. Mike, as you know, we retreated to the mountains of Spain last week, where we decided, with 12 years of business experience and metrics under our belt, that my Wall Street is going to reposition. We're going to reposition ourselves, and the output of the decisions made in a mountain in Spain will become apparent to our valuable listeners and subscribers over the months ahead. But one life hack that I've learned over the years is to try and look at myself as if I'm not me, right? And to advise me what to do, which sounds far out. It's a great mind hack. When you're in the middle of your work and doing what it is you do in your life, imagine flying above yourself and looking down at your whole life and being a consultant to yourself. I've done this so many times, and it's actually very powerful and I love it. But here's what I would tell me to do with the floating me knowing what happened in Spain. I would definitely sign up for Horizon and Profit right now. Profit is only $500, 499 bucks. Its returns are face melting. Just look at the returns. And Horizon is only $1,000 today. So email Frank at mywallstreet.com and he might do you a deal. But believe me, in repositioning, there will be no more deals. But deals are going, but they're going to be few and further between. Is that the expression? Further and fewer between? So
Few
that's
and
that.
far between.
Few and further between. So if I was advising me now, I'd say, yeah, I'd buy that right now. So anyway, there you have it. And if you haven't two pennies to rub together, subscribe to our podcast. Like and follow for more. 5 stars. Leave 5 stars.
There you go. Okay, we are discussing a company. You suggested this one. You were talking to
Yes.
someone in the business,
Yeah.
so I'm interested. You kick it off, and I'll come in
Yeah,
at the
well,
end.
I met a friend of mine, Paul. Hello, Paul. And Paul is a senior portfolio manager for a firm with a whole pile of money, a big ball of money. I won't say his name, but Paul, hello. And as usual, we were talking stonks, and I said, "Hey, what stonks do you like?" And I asked him for a name of stock that he loves right now. And very interestingly, top of the pile was a company I'm pretty sure everybody has heard of. I'm absolutely sure everyone has interacted with, and it is Adobe, which is a company that has grown revenue every single quarter for the last 4 years. That's no small feat, from around $3.4 billion 4 years ago in 2020, late 2020, to nearly $6 billion today. So
That's
this
per quarter.
exactly. Sorry, quarter.
Yeah,
Exactly, per quarter.
yeah,
So I thought what I would do is do what I do and give a teeny weeny history lesson on the company that I think most people go, yeah, I kind of think I know them. What did they do? And we'll have a little chat about it. How does that work for you, Mike?
yeah. Sounds good.
Well, it started in '82 when two engineers, John Warnock and Charles Geschke, left Xerox to start their own company. And they named it after a creek that ran behind Warnock's house in Los Altos. So Adobe is a river known, I'm sure, to a couple of our listeners. And their first big idea was a product called PostScript, which is a way for computers and printers to speak basically the same language. And anyone who went through the '90s and early 2000s will remember that when you plugged a printer into a computer, like it was a complete IT project to get them to talk to each other. But anyway, Apple licensed Adobe's products and specifically for LaserWriter, and it kickstarted an entire desktop publishing revolution, you could say, where the average person in an average room and an average job could use their iMac and write a nice document that looked good and print it off. And suddenly anyone with a Mac could do like professional looking pages. And this was a big leap for small businesses. And it sounds very quaint at this stage. But when you think it, like we all interact with computers in a million different ways, but in the early days of computing, to create your own document that looked pretty professional was a revelation, really. And in the early '90s, Adobe wasn't just powering printers. It launched and acquired a whole bunch of tools like Illustrator and Photoshop and Acrobat, which is the one that I think brought them into my line of sight. I remember Acrobat Reader, and it was the default for designers and publishers. And as you may know, Mike, the PDF format came from Adobe too. And that's why I said at the top of this piece that everybody who has a computer has interacted in some way with the output of Adobe. They invented the PDF, and it's still the world standard for digital documents. And I think without being tech at all, you know, with a PDF, you send it from this machine to that, and from that machine to an iPhone, and from an iPhone to an Android phone when you open it, it will always look the same. It locks down all those elements as opposed to moving them about. And if you've used a computer, you most definitely have used something from Adobe. I was talking to an entrepreneur uh, in America many years ago who once asked me, "Hey, have you ever been in a bathroom?" And I was like, I have been in a bathroom. He goes, "Then you're a customer of mine." And and I was like, well, I have to say, I'm starstruck. He had invented some kind of widget that went into water closets in America, like into the cistern. But I kind of feel that that story sprung to mind when I started reading about Adobe. So anyway, through the 90s and 2000s, Adobe just kept expanding and kept expanding, and they picked up a company called, or a product called After Effects for video editing, and then they bundled everything into a thing called a Creative Suite, which you could buy on discs. You'd go into a computer shop and buy Adobe's Creative Suite. And whenever I bought anything like that back in the day, there was only one thing I wanted. I think
Yeah.
strategically, Scott Galloway would say it's Rundled, but there were like 20 software packages. I only wanted one. But they eventually trundled along, got bigger and bigger and more known for what they do. And then they decided to do a big pivot in and around 2012 and 2013. And I mentioned um, like nostalgia and something being quite quaint. And what I'm going to describe is everyone's going to go, that's hardly a pivot, but you got to rewind 13 years. And they did something that most software companies were quite scared to do, and now it's just a norm. And they stopped selling that box software where you walk in and buy a bunch of discs, and switched entirely to over the air, or through the internet, Creative Cloud. And at that time, people were complaining because the internet was way slower. And it turned out to be a brilliant move because it gave Adobe this steady recurring revenue. It let people update products constantly, which really is a bit of a headache when
Yeah.
they're doing it so
Doing
often.
it on discs and all the rest and downloading content. Yeah. It's kind of one of the pioneers. I know Salesforce is the pioneer of SaaS, but Adobe was right there with it behind it in terms of
Yeah,
that transition.
no, you're absolutely on the money. I mean, they were the first kind of benefit to them was, as I said, the recurring revenue, and to the customer was the updated software without kind of too much drama. But then this kind of moving to the cloud was step one in being quite early. But it was the kind of we do AI of its time. You know, we you update your software to the cloud, and it's a bit like now in 2025 every company is trying to push their AI agenda. And speaking of which, Adobe are doing AI, and in recent years it's leaned heavily into AI and its creativity tools, and specifically a product that they launched only a couple of years ago in 2023 called Firefly, which lets users generate images and effects, a bit like Midjourney or DALI if you've used AI to generate a picture. So we're kind of all becoming quite accustomed to these rather, I don't know, I don't know what's the right adjective, but they are displeasing images, I suppose, generated by AI. So it's kind of like, show me a picture of a baby riding a motorcycle or something like that. You know, things that are a little untypical, and they have their package that does that kind of thing, but it's trained on licensed data, so it's safe for commercial use. Whereas a whole bunch of other tools are not safe for commercial use, and then it's built content credentials to tag AI generated media for transparency. So, what it really started out as, which was this kind of leader in publishing, it remains, because what I'm describing here about keeping a control on AI is being a leader in publishing. And whether it's printing or digital media or software or whatever, it is a business that is very much still relevant, despite it starting off by shipping CDs with our DVDs or whatever you call the data discs with software packages.
Yeah, yeah, absolutely. We kind of divvied up responsibilities when we are looking at Adobe, and I put it three headings on my notes for
Mm,
this because I think it's
tell
a
me.
really interesting business to talk about now. Um, but what it'll look like in 5 years is kind of the inflection point, I suppose, of this stock, because for so long it's been seen as this ultimately high quality software business. It's got the business model that everyone was chasing after from 2020 2012, which you said for 10 years it was just exemplary SaaS business, high margins, scalable, all the rest. And since then, there's been a lot of question marks, and fair enough. You know what I mean? So I titled the three titles were "Where Are We Now?" The bull case and the bear case. So I'm gonna break down exactly kind of what's happened to the stock essentially, and then if you are maybe seeing an opportunity, what that would look like, and if you were seeing kind of maybe a company circling the drain, what that would look like as well. And then we can kind of discuss which side you're on, I suppose.
Interesting.
Uh,
Okay.
so where are we now? Shares of Adobe are down 50% from all-time highs set at the end of 2021. Since that time, sales have gone from 16 billion in 2021 to 23 billion in the last 12 months. So the first three quarters of 2025 and then the last quarter of 2024. Operating profit has gone from 5.8 billion to 8.4 billion. It's maintained an operating margin of 36%. Its revenue growth has been about 10% since 2022. So on average, like as in sales are still chugging along very nicely. Return on invested capital has improved from 23% to 27%. Gross margin has gone from 88% to 89%,
Wow.
89% gross margin.
That's insane.
Um, so, like, as in, nothing has really changed performance wise in those 5 years when the stock has got down 50%. Business is
Actually,
ticking.
nothing has gone negative. A lot of things have gone positive. Like we're talking about a doubling of revenue with an 89% gross margin.
Yeah, well, not so much doubling, about 50%. But the business is taking long for sure. It's just the valuation has fallen off a cliff. So at its
Mm.
peak in November 2021, which was an incredibly frothy time, high valuations, anything with software in front of it was trading at kind of ridiculous valuation. So it was
Mm.
trading at 60 times earnings and 20 times sales, which is, and it was a 300 and something $1 billion business. It's just kind of unheard of. To today, when we're looking at 20 times earnings and 6 times sales, and with the caveat that this is also a quite highly valued market. I think the average valuation of the S&P 500 is actually more expensive now than it was in 2021. It's just maybe focused in different areas, and software is certainly a business that has investor sentiment is soured. Now, you don't have to be Einstein to figure out why investors 5 years ago were willing to pay, say, 3 times as much as what they're willing today. And of all the software companies that have been sold off over AI fears, Adobe does feel right in the crosshairs. Well,
Mm.
for a few reasons. Obviously, we have seen the capabilities of generative AI, and when it comes to image creation and editing, whether it be like leader, like just the basics that you can do on your ChatGPT or Perplexity or Claude app, or the specialists like you mentioned, like Midjourney or Dolly, where it really kind of put into context. Wow, these capabilities are what it can do, you know, without any kind of skill or background in graphic design or whatever else. So as Adobe has essentially went from a cornered market with a few up and comers, it didn't have it all to itself. Like Figma and Canva were making an impact to the business, to a completely different competitive landscape. And it's obviously taken its toll on the stock. Of course, like Adobe is, and you mentioned, investing heavily in AI, the Firefly product in particular, and it is seeing results in its Q3 earnings. CEO Shantanu Narayan claimed that Adobe is the leader in AI creative applications, with AI influenced ARR, annual recurring revenue, surpassing 5 billion, and AI first ARR. That's a lot of acronyms there. Sorry,
Mm.
AI first annual recurring revenue exceeding 250 million. So, but reading between the lines, what that really means is that they integrated AI into the existing products like Photoshop, Illustrator, and then Firefly, of course. Something like Midjourney isn't really going to be able to catch up that fast with the legacy software and the fact that it's got 40 million or something subscribers. It's basically owned the graphic design industry for that long, and it's integrating AI into its products. So yes, it has that step up, that advantage, and I guess this will lead into the bull case of what happens next. You know what I mean? Because there's a fork in the road. It's a Robert Frost poem here for Adobe, um, and going down the bull case. There's a lot of reasons why people are talking about it. We're talking about value investors now, and a lot of that comes down to the numbers and the thought process of, wait a minute, we're overestimating how big an impact AI is going to have on this industry. because operationally, at least for now, anyways, Adobe is still the high quality business that Wall Street once valued so highly. Margins are ridiculous. Still, growth is steady. It's bought back about 15% of outstanding shares in the last 10 years.
Wow.
And yet you can get a stock like that for 20 times earnings when the S&P 500 average earnings multiple is about 30 times. So that's a serious discount to the market for what is, on paper, an incredibly high quality business. It's incredibly profitable, some of the best margins we've ever seen, and it's been able to maintain these margins while still investing heavily in AI. You know what I mean? It's not like the company has, because it has the resources, but it's not like the company is, wrecking its margin profile to go after this new industry, this new technology. So none of it's, and this is where I think the arguments can be made, where none of its competitors have that same kind of financial heft or resource behind it. So it is dealing with the software legacy stack, and it's obviously going to be less nimble, but no competitor comes close when it comes to cash flows and a piggy bank. Adobe could and should be the top spender in this market. It should be able to acquire the top talent or close to it. I mean, I say close to it because, in terms of AI, the hyperscalers are hoovering up everything else. Do you know what I mean? So yes, it's the most well resourced in the kind of design market, but if Microsoft and Amazon and Facebook are spending billions to get employees, they are going to take up, the upper echelon. AI image editing probably falls down the list of priorities when you're talking about, general intelligence and all the rest. But it should be able to pay way more than something like Midjourney, something like DALL-E. Do you know what I mean? It's also going to be able to rely on the cash flows it already has, its ability to raise debt, and the fact that it's a $130 billion company, $140 billion company, who is going up against cash burning startups. If it can leverage this advantageous position to go out and build a best in class product suite of AI first or AI improved offerings, it can retain its client base, but charge them more, and then also attract new ones. Because remember, it has so much training hours and sunk costs from the world's graphic designers locked in. These people still exist. It still is a profession, If all that comes to pass and you can buy the stock for 15 times 2026 earnings, that's a really attractive bull case. So yeah, that is the kind of, if you go right and everything goes well for Adobe,
Okay.
that would be one potential situation.
Right.
And you can see why experienced investors, hedge funds, and all the rest are interest has been piqued with it, because it is very much entered into value territory. And if that does come to fruition, huge bargain. Now, the bear case would scare me as an investor, because the bear case for Adobe is that, generative AI has brought with it like a seismic shift in the industry that it used to dominate. Like, so much so that in 5 years' time, there's a decent chance of it being pretty much unrecognizable. Graphic design as an art could essentially become obsolete. And like, the fact that any design is at the fingertips of the layman with a simple request into some kind of search bar, that's unheard of for if we were here 5 years ago. Do you know what I mean?
Yeah.
So Adobe in this instance is this expensive legacy system that, yes, may offer high-end tools you can't get anywhere else, but for say 90% of jobs, that's not necessary. It goes from a mass market appeal to kind of a very specific niche. And like, Adobe for so long has enjoyed this economic moat of like huge switching costs and ultimately unbelievable pricing power, because subscribers were essentially locked in to this ecosystem that controlled an entire industry. If you wanted a job, you needed to have skills for Photoshop or Illustrator, which was, taught in colleges. If you worked on other programs, you would essentially be a pariah. Why would you ever go for anything else than the industry standard? And now what's changed? Well, like, potentially everything has changed. Is graphic design as we know it a viable industry for college students? I think you have to be very brave. If you were 18 or 19 right now, you'd have to be incredibly brave to be like, yes, that is my intended career path. That's what
I
I'm
think
going to
that's
become a
I think
specialist.
that's terribly sad, really. So what we're saying is the share price is a proxy for a profession where one gets to express the ultimate human expression, which is art. What differentiates us most from other sentient creatures? Art. And now we're saying that Adobe, which was the toolbox for artists, is its stock is taking a nosedive because the machines are taking over that profession. I think that's if I'm right in what I'm saying, I think that's terribly sad.
Incredibly so. And this isn't like, I don't have the small violin out for $300 billion Adobe, what $300
No.
billion back in the day, and it is an element of art to it, but a lot of it isn't as well. And I feel like there will be people in the graphic design industry now kind of banging their heads listening to me talk, because I obviously don't have an extended knowledge of it. And there's so much more to design in general than just being able to use Photoshop or Illustrator. I'm probably offending a lot of people as I say this, but I do think in real terms, and in particular how fast this industry is moving, it's hard to see that same economic moat for Adobe endure in the next few years. I think there will still be skilled designers out there for sure, and they have all this retained information and knowledge that will pertain so well to them moving forward. But there's a similarity in terms of software development now as well, where the people that already have these skills and now have the tools in terms of generative AI don't need the underlings as much as they did. So what happens to that next generation? The people coming out of college, the people maybe before even going into college now. It seems like the need for, I don't want to say underlings, but the need for entry level skills that you then build up and become this, person at 40 who would be able to use all these new tools available to them. That kind of is going away, and that's a problem much wider than graphic design. That's a problem in, say, all these industries now, where we have tools that are able to cut out resources and kind of donkey work in a sense. But donkey work is how people become skilled. So this is a bigger issue than we're talking Adobe, and I'll bring it back to Adobe now. But like in the sense of there's going to be a gap forming that AI tools fill. But then what happens to those workers? How does someone become skilled if that's just not a thing anymore? So yeah, that's the philosophical kind of argument to all of this, and it goes beyond Adobe and graphic design in general. But I think graphic design is one of those industries and skills and lines of work that is the most directly affected. And so that kind of seismic shift would really concern me for this business, for this industry, for this market. So yeah, so back to the kind of company and the nuts and bolts. Adobe does have the financial heft to invest big in AI. We'll probably see plenty of acquisitions. We'll probably see plenty of product launches, loads of R&D expenses in the future. Maybe those ridiculous margins would become slowly eroded. I would imagine, like, say, super users would stay retained, but then the fringe cases start to disappear and it becomes a bit of an uphill battle in terms of its retention figures, ultimately leading to discounts, decline in revenue, reduced margins. It's got a long way to fall. Market cap is around 440 billion. It's got about 40 million subscribers. But from a helicopter view, it seems that maybe the cat's out of the bag here. Chat GPT, I mentioned inflection points at the start of kind of this tirade, but Chat GPT being released in 2022 probably is that inflection point for Adobe, where people look at it before generative AI and after generative AI. But we're comparing, say, the bull case to the bear case there, and the risk reward factors, I suppose. And you're looking at the bull case and be like, yes, this is a bargain. If it continues, is able to deliver 10% revenue, and it'll be a share cannibal, and it'll invest well or whatever. And then the bear case is, this could be like systemic, endemic failure, a terminal business that eventually just slowly circles the drain. So yeah, I know where I stand between the two. I feel like there's arguments made on both sides. And I think probably am leaning a bit to the kind of sensationalist side of AI is going to ruin everything, blah, 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 blah. But for especially this industry, for specialty design, for the capabilities we've seen in such a short space of time, for things like Midjourney, for Dolly, for even like the basic editing software you get in like ChatGPT and stuff, the fact that that's moved so fast, I just feel like that eats into Adobe's target market so much. And those 40 million subscribers become 30 million, become 20 million, become 10 million, maybe become 5 million. And this business doesn't go away, but it goes from mass market to niche. And at 130, $140 billion market cap, that's a long way to fall.
Hmm. Hmm. So if you were handed 10 grand by your uncle and said, I fancy Adobe, but do what you think, would you put it into it?
No.
Hmm. You make a very good bear argument there because certainly shone a light on the aspects that I hadn't really considered. When you look at that quarterly revenue trundling up, 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 it's like a pipe system in a church. That's the way I want people to picture the revenue. A whole bunch of pipes on the organ. The revenue is just going up, 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 and you kind of think, well, the trend is your friend, and this is a business that's dominant. And if you think about what ultimately is the end product of a designer, it's a something that a human consumes. A pair of eyeballs fall on it, or it goes into your ears. Will that demand ever go? No. So will Adobe own the creation of that end product, the imagery or the sounds or the both? And the answer to me is probably. Now, who's driving the bus might change from human to robot, the analogy being AI, but I do think they're going to hold their position as the creator suite for the end product that humans consume. And I think it is, as I said, very sad that we are looking at the unquestionable diminishing of a very admirable profession, which is design. To me, it's analogous to an AI system knowing my top 10 favorite songs. So it knows I love Bohemian Rhapsody and Peg by Steely Dan and Master Puppets by Metallica and all these kind of things. And they load up 10 tunes that have always appealed to me, and it produces on the spot a customized piece of music that through the algorithm of what I love, it will know I like and it will get it right. And to me, there's a sadness in that, which is the artists who created something are not there. It's a machine. But then there's the resultant feeling that if it did produce a piece of music that evokes feelings that get me excited or interested or whatever, the heart rate up, it is a success from the production perspective. And if you bring that into
Yeah.
it, tell me.
Well, no, I see what you mean, and like I don't think you're wrong, but I think a lot of Adobe's functionality doesn't go into art as art in its purest form.
Yeah, 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 yeah.
Some of it obviously does. Like digital art is a real thing, and it's out there,
Mm.
but it's a functional art. A lot of the designs that would come from Adobe, and in that sense, this is when I talk about the super users versus like the fringe cases where good enough suffice for a lot of people in a lot of
Mm.
say we'll say functional design. And I think that's where the even though there's so much switching costs involved and like people have poured years and decades into learning the company's programs and all the rest, that that good enough unfortunately will suffice, which is another you know sad like train of thought to go down, that like this is just good enough and that'll do me. But
Yeah, yeah,
yeah.
yeah. It's amazing to me that the company has increased revenue quarter on quarter since the quarter that ended in December 2022. Every single quarter is up by 10%. Up, 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 up. It's so predictable. And that's
Yeah.
compounding. I'm torn because on one side, I find it to be a dreadfully boring business to look at. I just do it. I went through its IR investor relations web presentation yesterday, which was beautiful to look at, as you would hope. But
You would, Jesus, yeah.
but it was wow, it was one hot mess. There's an awful lot of bits to the story, and I found it. I don't want to say it was cohesive. Of course, I mean, it's a business as old as the hills, but I just found it to be a bit of a boring company to look at. So I'm not saying that every company needs to be exciting. I don't care. But will the market ever recognize the fact that revenue is growing at circa 10 to 11 to 12% every quarter? In the face of the threat that you've described, I'm not so sure. So I would not be a buyer of Adobe, but I say that in full recognition that it seems to be going into deep value, but that threat is still there outside the window where they can tell us a story that AI is their their friend when in fact it might be their foe.
Yeah, absolutely. And this is always the kind of conversations we have around these value traps or deep value, or like, is it catching a falling knife? The
Yeah.
numbers always look really good. But beyond the numbers, where is the threat? Is it systemic? And you kind of have to have a bit more. You talk about like the art and the mechanics of investing. I think this is more of the art of, wait a minute now,
Yeah.
stop and have a look, and what's the long term vision here, and yeah, like a lot of it is trying to predict the future in a way.
Yeah.
Um, but
Yeah.
yeah, you have to detach yourself just from the quantitative and just from the numbers.
Okay, good chat, Mike. I'm going to do something, an unpaid segment, but I am going to try and just kind of shine a little torch on businesses I've interacted with that I just like. And I think they're doing something nice because I think entrepreneurs deserve a break. I've been through the depths and pits and highs and lows of being an entrepreneur, and I interacted with an Irish business recently. As I said, this is by no means a handshake. This is just me. I've bought a business. Sorry, I haven't bought a business. I subscribed to a business called Early Table, which allows me to book restaurants early because I like dining early. And I got like 30% off. And I was like, this is so good. It was a restaurant I go to regularly with my wife. I always go early. I always pay the full whack, and I got 30% off the meal. And the restaurant is Lobster in Monkstown, which is the most amazing place, I have to say. It's amazing. There's two recommendations. So Lobster in Monkstown is one of my favorite restaurants, and Early Table got me 30% off the bill, and it pretty much paid for its whole year subscription. So I'm going to be using Early Table for Lobster for the whole year ahead, to be honest. And I'm going to make a fortune, I tells you. So anyway, they're two businesses I just thought I'd just tell people about because I think they deserve a little boost. So there you have it.
Okay, sounds good. That's
Um,
our first and last free ads in this podcast.
Yeah, and it mightn't be our last. We should do it because it's just nice. They're not ads, they're just telling people about stuff. I think it's quite nice. People who listen to this podcast love business, and I love business, and also everyone loves a deal. So Early Table was the one. Really, it's super slick. You just book through the website, and they're going to launch an app. I was reading, and that's it. You're in, and you're 30% off. There you go.
Okay,
Right. Oh yeah, following profit, where
everybody
you
loves a deal. There we go.
everybody loves a deal. And what's the deal here? Well, the deal is every week we're going to talk about one of the current profit stocks. So even if you're not subscribed, you get to peek behind the door at one of the 10 stocks that are currently live in profit, which is our just tell me what to do service. It always holds 10 stocks. It rebalances every 4 weeks. Its returns are face melting. Just look at useprofit.com or go to mywallstreet.com and click on the profit bit. It is unbelievable. And I'm so well. I won't go on down that anyway. But profit is the bomb. Trust me. At $500, now I'm plugging it. At $500 is I think the best $500 you'll ever spend, especially when we reprice it to $5,000. But that's not for today. I need to caveat that we are talking about a company in the knowledge that profit may sell it in a couple of weeks. It only rebalanced there last Friday, so
Absolutely, yeah. I
yeah.
talked about Core and Main a couple of weeks ago, and it sold it for 5% gain.
It did actually. Let me
Yeah.
have a look here. So the four stocks it sold on Friday last, Corn Main, as you said, Gilead Sciences, it sold for 10.39% gain. It sold Insulet Corporation for 16.17% gain, and it sold Westco International for a 19.91%. In other words, 20% gain. So it's sold for stocks, and what you do is you take your cash from those four, you divide it into four little equal piles, and you buy the four that came in the door. And I am going to talk about one of the ones that came in the door, which is called UL Solutions. I never heard of it. That's the thing about profit. Until it publishes live to the website, I have no more insight than the next person. And I looked at ULS. It was bought, as I said, on Friday, November 7th at $84.99, say $85, and it's up about 1% since, but I'm sure profit will keep an eye on it and make sure it keeps going. But this is an old business. It goes all the way back to 1894 when a young engineer named William Henry Merrill Jr. turned the chaos of early electrification into a discipline called applied safety science. And I find it interesting how people's names from 100 or so years ago, always have a gravitas they're always like better names. Henry William Merrill Jr. Like nobody's called that anymore. Hello, how you doing, Mike? My name is Henry McPheasant Carpendale III, founder of My Wall Street. Like you just don't hear. It's all like Emmett Savage, Joe Brady. I have to upgrade my name. But anyway, so William Henry Merrill Jr. founded a business with an idea that new tech needs to be made safe, which you got to figure 100 plus years ago, they're looking at electricity being stuck in to all these devices and they're like, oh, that lad over there just dropped dead, something going on. So this is a brand that if you're a bit of a nerd, which I am, to be honest. I love looking at the branding and the names of every company. I look underneath everything. I want to see where everything was made and who made it. But apparently in America, you can see UL, the letters UL stamped on all power strips and EV chargers. And send us a note if you are a nerd who spotted the UL, because there you go. You're looking at a brand that's well over 100 years old. So if Ulta Salon, Ulta Beauty, which I discussed a couple of weeks ago, is all things beauty, UL is all things safety. And the idea was, and still is to this day, to be the independent referee as new waves of products and standards crash into the market. It's a nice idea. One example is the fact that, this is to me an example of how investing makes you smarter. It points out industries and businesses that you never would have heard of. I probably said on the podcast before, but I remember years ago reading about a company called Portfolio Recovery Associates, and their ticker at the time is PRA. Maybe it still is. Maybe they're still around. PRAA, I think they changed their ticker. But the point was that what Portfolio Recovery Associates did way back when was they rocked into credit card companies and they said, hey, who are your bad debtors? And they said, here's 10 billion worth of unpaid credit card debt. And what Portfolio Recovery would do would pay, say Visa, for example, 5 cents for every dollar owed, and they'd take it over and they'd recover it. I don't know how. I like they would get those bad debtors to pay up and they would make 7 cents on the dollar. So when I remember reading about it, going, that's a revelation. I never even knew that was an industry. It kind of makes sense once there's lots of ethics and good ethics. But this to me, UL it brought me back to PRA, Portfolio, because I was like, I didn't even know. I never even thought about this being an entire company and industry. Anyway, fast forward from our multi-barrel named friend, a century plus, and one corporate reorg later, and UL Solutions is now the for-profit arm of the broader UL enterprise. So it sits beside, there's three bubbles, and it sits beside two nonprofits, UL Research Institutes and UL Standards and Engagement. So last April 2024, UL Solutions listed on the New York Stock Exchange as ULS at 28 bucks a share. And it was kind of interesting because the shares were sold as secondary from the non-profit owner. So in other words, the money from the flotation went straight back into the standards business, the one I'm discussing. And the stock opened above issue on the debut and valued the company in the kind of mid-single digit billions. And at the time, commentators were calling it a rare public company with a public good backbone, because all the other stuff was all about standards and behavior. Now, the leadership, its CEO and president is a woman called Jennifer Scanlon, and she's very much kept the message consistent since all the way up to the IPO. And since then, pick attractive niches, or niches, as you say in America, and those niches are energy, automation, and consumer tech, which is quite a broad playing field, and let secular change do the pulling. So they convert their fields into better mixes and margins. Quarterly proof points, which is steadily organic growth and rising EBITDA margins and disciplined capital allocation, all line up with that brief. Now, when you look at its IR deck, investor relations deck. It's again, it's a bit boring, but you know what? Boring can be good. Profit
I
has
was
looked
about
at
to
the,
say I wasn't expecting the safety solutions for
no,
electricity to
it's
be
not.
that exciting.
Yeah, it's not like we're sending rabbits to Venus so we can say there's life on Venus. Like it's total, literally, is this Earth strip? Does it go deep enough into the ground? And it's a competitive field. Like what they do, there's a lot of competitors, and possibly is seen as a I suppose like utilitarian. It is utilitarian. It's just expected to be there always where it could be done well. Um, and regulatory cycles can delay spending, and portfolio pruning within their own portfolio can bring a lot of noise into their quarterly results, I've noticed. But we don't care. Profit just told us to do it, and that's that.
Yeah.
So that was it. That was kind of quite an interesting story, especially look, you
Well,
can't. You,
what I
yeah,
find really interesting is that it's a 130-year-old business
yeah,
that
yeah.
decided to IPO last year. Do you know? It seems kind
Miss
of
Scanlon walked into the room and said, "Gentlemen, ladies, the time is right." And they're like, "What? What? Time is right for what?" Well,
yeah, but
there.
a bunch of like second generation shareholders that are all like 95 being like, "What's an IPO?"
Yeah,
Um,
she said, "I found this letter in my desk from William Henry Merrill Jr., the first, our founder, saying, 'Would you mind floating this thing in the year, in the year 1952?'" And she goes, "We've kind of missed it, but sure, well, we'll do it now. Why not?"
yeah, I mean,
Yeah.
like just their performance since that IPO is incredibly impressive. So
Oh
it's clearly
yeah.
doing something right. And
Hmm.
it's interesting looking at the the stock charts and the type of business, not even so the type of businesses, but the performance of the stock and trying to identify the. I know there are thousands of quantitative measures that go into profit selection,
Yeah.
but seeing if there's any patterns and stuff, and like Corn Main bought last month after a poor earnings report and bounced back a little bit, and then you're seeing something like US Solutions where it's just up, 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 pure momentum. And so yeah,
Mm.
it's interesting to see, and then it's interesting to learn about these new businesses as well, even though they mightn't be the most exciting in the world.
Yeah, you said it. Mike, profit is still only $499 a year for the handful of days that remain in 2025. And in 2026, it definitely is flipping to a grand. That's the next milestone. And once you buy at a price at my Wall Street, you keep it forever because we don't like people complaining. We're sick listening to them. So it's like you can keep your price, but I would say buy it before we swap it over to a grand. It's the most
and if
amazing
you
product
are
I've
and if
ever
you are
seen for fun.
interested, you
Yeah.
can write into frank at mywallstreet.com.
Frank, and that's my my wall, WALL, street is ST, mywallst.com. But we also own the domain mywallstreet, fully spelt out.com, but we do nothing with it. I think it redirects to the st.com.
Okay. Some interesting business. This is a good chat. Emmett, thank you for joining me as always. And thank you everyone for listening in. And remember, if you haven't already, subscribe. YouTube, Spotify, Apple Podcasts, wherever else you're getting them. If you subscribe, it really does help the show. So
Yeah,
if you're
just
enjoying it,
subscribe. Come on. We don't ask you to do anything, folks.
if you're also if you're still listening
Crying
at
out
this
loud.
stage, we're doing something right. So you may as well give us a wee
Yeah. 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 You may
thumbs
as
up. You
be
haven't turned
one
us off
person.
yet.
Yeah.
Okay. Thank you. And we'll talk to you next week.